Happy Friday, everyone. It's 8:04 a.m. coming at you from Chicago, Illinois, Central Time, on the 2nd of February 2018. February looks like a selling start, a whiz-bang start for sellers here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, it's red across the board. The only thing that I have on my quote board that is up is the U.S. dollar index futures, trading up 0.6%. The dollar's trading at 89.04. Everything else is down. The strongest down moves have been through Bitcoin, of course. Bitcoin futures trading 87.10, down $370 or down 4%. Bitcoin, as you probably know, have lost about $120 billion in the last 24 hours or so. RBOB and crude oil are also down this morning, but crude is really has not moved that much. It's down only 14 cents, trading at 65.66 on the March contract. So overall, the market's allocating to who knows where. Because we have a slight hit in gold, the pound, the bond, the 10-year is still standing better than others. It's down 12.5 ticks. We just had our non-farm payroll and unemployment report about a half hour ago, which came in stronger than expected, but the market immediately sold off. Just not even an uptick. 200,000 came in versus 180,000 expected. 4.1% in line with expectation, which still matches the unemployment rate in December of 2000. So overall, pretty decent number. The market finally rotated back up. By the way, the SOC, or the scene of the crime for the non-farm payroll, is 2806.75. 2806.75. That number, that level has, I'll show you that in a minute. That level has been taken back. So the auction now resumes. You'll also notice that, and I'll show you it also, you'll also notice that the market not only tested below, it tested down about 7 points. It actually tested down to yesterday's primary target, believe it or not. It tested down and it tested up. Still couldn't get back into the prior day's range. Yesterday was an inside day, except for the couple of ticks we took out at the close. Very interesting movement, very orderly auction rotations, pretty good control by the short time frame traders, a lot of respect for intraday levels, which is nice. These are the days that matter in the year. But we did test below and above, and then we consolidated right on the SOC, and now we're trading just below the SOC and consolidating in that area. So all in all, pretty orderly. Yesterday we saw some interesting divergences. I'll go over those in a minute. Let's start out by looking at what's left on the day. So non-farm payrolls are behind us, but at 10 o'clock Eastern, 9 Central, we get U.S. durable goods orders for December. No expectation. The prior's 2.9. We get University of Michigan at the same time. This is the final figure. This is a confidence figure. Expecting 95, higher than 94.4 prior. For January, then we get factory orders for December, expecting 1.5, higher than 1.3 prior. At 1:30, we get Fed Speaker Kaplan, and at 3:30, we get Fed Speaker Williams, who's a hawk. But it should be a fairly interesting day. Yesterday didn't play out the way I had expected. Let's get into our review portion here. Yesterday, the expectation was for the market to make a small attempt going higher to be responsive. It was quite bearish coming in to make an attempt going higher. But what ended up happening yesterday is it ended up opening a little bit higher than where we were at the time of the trader bite. It opened at 28.17, so it ended up opening somewhere around here. So shifting all of this up, we still didn't see still didn't see the primary scenario play out as expected, because it pushed way too high. So this was not what I expected. I expected it to push into. So if we had opened up here, I would expect a push into 27 to balance the overnight inventory, then drop, and then get out of the range. We didn't get out of the range until the close. We ended up pushing all the way up. I'll show you that in a second. The secondary idea, so this did not work. If you had sold on the way up, there was a chance to get a scale or two, but there wasn't an opportunity to catch a good wave. This is the secondary. Again, it actually opened up here. We ran up pretty good right after the trader bite was over. This ended up looking like what we got if you superimpose it, but we stopped right here, and it ended up breaking lower and then up and then back down. That's what we got. So it was easier to trade this idea than it was the primary idea, but both were off. Oh, hang on. My monitors are not operating as expected, so I have to do this. So here it is. Pretty wild, right? So what this looks like to me by the end of the day is I'm not a pattern trader. This looked like a head and shoulder with the neckline down at 28.15 or so, and then we broke lower overnight. We're trading the SOC at 28.06 right now. So pretty tough to predict, or at least play the probabilities on these particular moves, on these big drops. There were some opportunities, and if you follow on Twitter, I did post them live. That the pullbacks were excellent. The pullback retests. Some of you have asked, how was I able to predict the pullback to the 26.27 right here, that this was likely to be done. Also the pullback from below to 26.27 for a continuation lower. That was the key trade of the day right there, and so on. But you can see those. I'll show you those in a minute, how I'm coming up with these. The reason these charts don't work right is because I have a 4K TV that I use, and it is not the software that controls the windows within it to split it into multiple desktops is not operating properly with IRT. So here's what it looked like on my trigger chart. This right here is where I posted, look out for the pullback. Really decent pullback area is what I said on Twitter around this time. I think it was somewhere in here at 141. I said look out for the pullback, expecting pretty good resistance in this area between 26.27. It went to 28, and then it rotated down, and boom, really beautiful trade into the prior day low. We poked by 2 ticks, and this looks like a failed auction at the low, which gave us pretty good strength. So what we end up with is a pretty decent taper on the bottom, good balanced distribution in the middle, and a smaller distribution at the top. giving us an LVN right here at 28, so good areas to play with. The overnight pushed to 28.31. And there you have it. The day finished right around the mid and the point of control. Too many Ks. Not sure what that means. What do we do from there? From there, we open up, we push. We open up in a gap. We push higher, and just sellers all the way through. So if we look at the delta here, let me readjust the scale. Let's do 50% to get a better idea. So let's shift this all the way in. Okay, so, all right, so we gap up and sellers come right in. You could see sellers really mean business right here. You could see strong selling right into this portion right here. And then they bounce up. And then the European session starts, and it's just sellers, 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 sellers. Okay, here's the non-farm payroll. The non-farm payroll pushes to 99.5. We got to 27.97, which was yesterday. Which was yesterday's target low for scenario number 1 on a trend down. We were looking for 27.96.50 or so. We pushed down 27.97 overnight, and we're holding at the low. Again, this is very low. This is pretty strong down delta. This is above 2 standard deviation delta on the sell side for the overnight session. The volume is almost 4 times what we would normally expect. All these build the context that the market tried to push higher, consolidated, unable to continue, unable to get the continuation yesterday. Sellers step in, we get the continuation on the sellers. Then we get a pullback, and then the sellers step back in again and yet again. And it's really clearly on the seller side temporarily as we stand right here. So that's where we are. Looking at the current picture, well, as part of our review, let's take a look at what we did with this non-farm payroll release. Okay. There it is. This is non-farm payroll right here. You can see the last print was 2806.75. That's where the auction was interrupted by the number. There is no updrift on the 200K versus 180K expected. There was just no push higher. You do not see any green dots on the way down, anybody lifting. This basically looks to me more like the bids just getting wiped out. You could see the book cleared out right here. So it goes dark. See this dark box right here? That's an indication of the market or the bids and offers completely pulling. Basically, algo shutting off. So they're not quoting the market as much as they were a minute ago. And immediately you have the bids pulling and the size going in, the size hitting on the way down is not as aggressive as you would expect. So it's allowed, you could say it was allowed to drop versus it was forced to drop. And then immediately pushes into these stronger areas. You see this dark line right here? This is what we want to see. This is order flow support right here. This is what makes this software incredible. We can see the history rather than just numbers flashing and disappearing on the screen. We can see the history of what the orders were doing as time goes by. And you can see these areas holding steady, and as the market drops, so you see this market pushing up, and as the market drops, you see this go dark. It's going dark here. Maroon, basically the highest, the relatively highest bid on the screen is right there and right there, and they hold steady and you get collisions. These are the at least short-term scalp reversal areas that scalpers are looking for. Just scalping paradise is what this software causes. So here's where we are now. This is where we are now. Okay, so we've traded from the non-farm payroll, pushed down, okay, pushed down, and then came right back to the SOC. This is the SOC right here. Probably not a good color to use. Fortunately, this is using the full color spectrum, and it leaves me with very little to draw with. This is the SOC, and then it pushes through to 2810, pulls back. Look at how it consolidates right at the SOC. So this becomes a key support resistance zipper, bounces back up, pushes back through, and it comes back and it consolidates against the zipper, and that's where we are now. Really, in my opinion, really excellent scalping opportunities, but scalping is not for everyone, and of course scalping is not recommended on smaller accounts. Let's look at what we are expecting for today so you guys can move on. Remember, we have a bunch of numbers at 10 Eastern, half hour after the open. This morning, we're trading below. We're trading below where we have been for the last couple of days. If we extend this profile forward, so as we push this profile forward and you see it build to the left there, you can see that there's just intense balance in these 3 days. Very excellent, if there is such a word. That's pretty poor English. Just excellent, excellent auctioning in a wide-ish range in this area. Just fantastic trading, in my opinion. We're gapping below. The expectation is for the market to continue lower on the open, and then I'm looking for it to have an impulse up. I'm looking for it to regain yesterday's range, consolidate in this area, and then continue higher today. I'm expecting it to go higher as the primary hypothesis. 2250 is the first spot, and if it still has energy, who knows? It's Friday. The key price we're testing today is likely to be 2827 back to balance. Okay, that's the key trade. Right now we've got 3 days of balance. We're pushing into pretty good support below the 2800 and a temporary support. And then I'm expecting it to reverse. I'm expecting the overnight inventory. I'm expecting the continuation of the selling. I'm expecting overnight inventory to step in, buyers to step in. Remember, the market's advertising lower to find buyers. It's seeking buyers, not sellers. Buyers step out of the way. Prices keep dropping. But I'm expecting that we have advertised low enough for now to come back into the balance range. We could push all the way through to 28, to that 28, 29 area, and hold steady. The first resistance is right up here. The first resistance above there is right up here. And the expectation is we would drift up. So keep that in mind. Okay. Secondary. The secondary is open auction. Market rebalances. Pushes into the range. Gets to yesterday's value low, which is 2817-ish, 2817, yesterday's open, and then we get an impulse down. So if I see an impulse down out of the range after it gets back in, I'm looking to press the overnight low for the overnight low stat, which, by the way, we didn't get yesterday. We didn't get that 98% stat yesterday. And the day before yesterday, not the day before yesterday, I think it was Tuesday, we didn't get the IB stats, another 98% stat. But I'm looking for 2797, looking for the market to fail to get back up and then to continue down and then rebalance on the close. That would be the second idea. All right, so that's long enough. Before you guys run off, Please take the time to hit the like button on YouTube. It is Like Friday, so make it happen. I'd appreciate it. Thanks for tuning in. Hopefully you saw some results, some good results this week, and you're starting to see a little bit of the light. The trading has been more volatile, and there are more opportunities. Good luck. Take care.